Looking across the main markets in the past trading session, all sectors were up 0.79%. Real estate and utilities did the best, energy, consumer discretionary did the worst. Looking across the main market, Apple slightly up, Amazon and Meta slightly down. Looking at the stock market fear and greed index, we're still in extreme fear of 19, but it's got a lot better. Considering that we were down literally at the 3 mark just a week ago, it's impressive. Could this be the turnaround? Let's have a look at the charts and let's run the numbers. Everyone, I'm Ken from CryptoTradingKS and the CTKS Method. If you're new, a very warm welcome. And welcome back, CTKS family. My goal is to assist you to be more of a financial blessing to yourself and those you love, spreading real wealth and positive excellence in the process. We have one of the best communities on YouTube, so if you're new, please consider smashing that like button and don't forget to subscribe. We can see the crypto market is slightly up. Bitcoin up 1.62% to 84,830. Ethereum up 2.66% to 1634. The greatest gainers in the past 24 hours: Fartcoin, Radium, Casper, Render, Monero, Algo, Decentralized, Mana, and XCN. The greatest losers past 24 hours: Mantra absolutely obliterated, AB, XDC, Bitcoin Cash, Athena or ENA, BTT, Trump, and Flare. So far, we're getting day after day after day of net outflows for the Bitcoin spot ETFs. We're also seeing net outflows for the Ethereum spot ETFs as well across the past 4 days. In the past 24 hours, there's been $246.46 million worth of liquidations, and the longs slightly larger than the shorts. 115,216 positions were liquidated. When looking at the Bitcoin liquidation heat map, we can see that there's liquidation levels around that 86,456 level on the 12-hour. On the 24-hour, it's a bit light. Also, on the 48-hour, around that 82,759 is an area that you might like to keep your eye on, and the 86,305 as well. To really realistically get any level of institutional interest, we have to go up to the 3-day period, and we can see down at 82,774 and up to 86,521. As I mentioned in yesterday's video, net Fed liquidity is increasing. This generally has a bit of a reaction when it comes to the S&P 500, Bitcoin, stock market optimism, and bond market optimism as well. It's a little bit delayed, but we've seen a push up in the major indices, and that of course has brought Bitcoin up as well. Unfortunately, a lot of people don't realize that Bitcoin and the major markets are intercorrelated and interconnected, and you can see it really clearly here on the S&P 500 futures. The blue line is Bitcoin, and you can see even on an hourly basis, the S&P 500 and crypto are moving together in directional correlation. What about the NASDAQ? Yep, it's exactly the same thing. What about the Dow? Yes sirree. And what about the Russell? Correct. It's all moving in directional correlation. You can see the Russell has a slight divergence here. It has a slight weakness. And profiting students, you know what that means already. Having been inside financial markets for nearly 4 decades, one of the things that you'll find, you'll create a lot of rules on your own. You'll learn rules from other people. Here's one that I created, Rule 225. Bitcoin cannot escape the stock market's gravity. And you've seen that absolutely clearly and plainly through the major index futures. Please keep your eyes on that. Therefore, to understand if crypto is coming up And having a trend change, we need to look at the major market indexes. Now, what I'm going to do is to look into the S&P 500. Why did we see this huge sell-off? This was because of the tariffs, and especially the reciprocal tariffs being so high, causing a global trade war. Now, that's recently been put on pause with the exception of China. How can we look at this from a non-emotional stance? Well, we understand that we are still under resistance. It's not over yet, it's not repaired, everything is not fine. Because even though we had this big surge up, which was pretty much retraced in the next day, we've had some upward price momentum. But we are still under resistance. We're starting to show a degree of strength by crossing over this short-term trend line. But you will find everything is structure. To give you a bit of a perspective, the S&P 500 has been trading more than 55,815 days. If I was to simply say, take this 52-day period, you can see this 52-day period here, and we'll make all our assumptions based on these lines that are happening right now. And this is generally what people do. So we take that 52, we divide it by that 55,815, and we get a really damn small number. That's a percentage, so we multiply it by 100. This is 0.1% of price history. Now, said another way, if we just get rid of 100 off that, we're disregarding 99.90%, or literally 99.91% of price analysis. That is pretty damn risky. But this is unfortunately what people do. Now, we do things very differently inside our community. We actually mark up all of this price history through 2 levels of standard certification. Now, I'm going to show you where the structure is inside the S&P 500. Now, this is not across 52 days, this is across all of that price history. Now, what we can see, there was really strong structural support as the S&P 500 shot down. It came through multiple safety levels or safety nets and was rebounded. The thing to understand, when you get a lot of panic inside the market, the lines will get cut through. That is absolutely normal, and I talk about this a lot in this month's service video. So for the elite service members who have not seen the video, please have a look. It's really quite important. Now, what we've seen is a rebound of optimism here, a finding of structural support around that 52.70, and we've got some fairly reasonable constructive price action. But don't forget, we are still under pressure. We're in a downtrend at the current time. We're not in an uptrend. We're in a retracement. Before, I was talking about the overlay between the S&P 500 futures and Bitcoin. Now, why do I talk about this? There's a very subtle and important reason to do so. When we look at Bitcoin, we can predict where the S&P 500 is going. Wow, how cool is that? Therefore, we must look at Bitcoin. Therefore, looking into Bitcoin with the same type of analysis, we can see we're pretty much underwater at the current time. We are quite underwater, and we're just retesting this particular area. These trend lines can give us some kind of idea if price is strengthening or weakening, but you realistically need to add across all of structure. You don't want to be looking at less than 1% of price action and making all your decisions based on that. It's statistically erroneous. And that doesn't mean you got turned on, that means it's an error. Okay, now what does that mean that we need to do? Well, we can see here there is multiple tail rejections to the upside. The sellers are definitely seeking to push Bitcoin down. Now, if they are successful in doing that, if the S&P 500, the Nasdaq, the Dow, and the Russell all follow the directional momentum of Bitcoin, where do you think the major stock market indices are going? And a lot of people say, Ken, I don't care about that. I'm trading the ASX, I'm inside Australia, or I'm inside Germany, or inside the UK doing the FTSE, or inside India. Actually, you gotta be careful because no stock market can escape the US stock market's gravity either. The US markets literally control global financial markets. Like it, don't like it, doesn't matter, this is the fact. Therefore, let's have a look into this price action because it's actually the most important thing we need to look at the current time. We can see that during this time, Bitcoin has been up and down and all over the place. It's gone pretty random, but actually it's all structurally based. And when you understand structure, it is a game changer. What actually occurred there was the Bitcoin came up to 85,728, a quite substantial structural resistance level, and it was rejected. It was also rejected from the 85,367 mark. We can see that Bitcoin is currently 84,543. It's just hovering below the 84,573 structural at the current time resistance level. Now, if we drop down, the next structural support is 83,843. Now, what happens if we go below that? We can see that the next level of structural support is actually quite a way down, and it's fairly strong as well, at 81,866. Remember, this is not a brick wall, especially if you don't have structure intermediate in this particular gap. This is called a negative CTKS gap. So we're likely to SO or structurally overshoot the 81,866 level if we get negative price momentum. And negative price momentum isn't a problem because everything is always moving in a wave. You can do incredibly well riding these waves. Now that's the bearish case. What about the bullish case? It would be that we get above this 85,728 and you can see there are structural levels above that, but they're relatively light. Many people say, Ken, I just want to, is it going up or is it coming down? Okay, let's look at price. Within a 24-hour period, price is going up and down like a crazy person. Look at this, it's all just crazy. It's up and down, up and down, up and down, up and down. So when you look at something, don't be like that. That is retail. What we need to do is to say, if we get above a certain level of structure, that is very bullish. But if we drop below another level of structure, that is very bearish. What you need to do is just keep your eye on the structural levels. That's it. You don't need to predict price because price has already been predicted for you with these levels. This is literally the world's only forward leading indicator of price. We know exactly where the structure is, exactly what we need to look out for. For example, right now, Bitcoin bullish must get above 85,728. And if it goes bearish and it falls below 83,843, where is it going to next? We already know the answer to that question, 81,866. But we know also there's this gap in here, so we could overshoot, and there's a gap to the other side as well. So this favors a literal movement down to around the 81,000. If it goes bearish, but it doesn't matter because you just look at the structure inside the market and you make your trading decisions and your investing decisions from that basis. A lot of people have been very interested in gold because gold has been going absolutely crazy. But what do we notice now? There's a bit of a downturn in gold. Now, what happened to gold? The answer is structure happened to gold. Look at this really strong CTKS structure at 3240. That basically stopped gold's ascent. Now we do realize that there's fairly good structure underneath gold. One at 3186, 3174 and 3164. We know exactly where the buyers will seek to come in and support price and where the sellers will come in to seek to push price down. Getting back to the S&P 500, over the past couple of days we've seen this 5285 level of structure was bypassed. It came up to the 5376 level, managed to break above it, got stopped out at the 5437 and it's back. and it tried again, and it's almost back. This is a very key level on the S&P 500, and these shaded areas are called SCs or Stanfield zones. They're where we accumulate or culminate up CTKS levels, which are those dotted lines I've been showing you on other charts. Now, what's very plain here is if we fall below that 53.76, we're going to make our way through a negative CTKS gap and possibly structurally overshoot this 53.02 level. That's for a negative side. If it goes positive, we must get above 54.37, preferably above 54.77. Just one thing to always keep in mind, price is always moving in a wave. It's always going up and down. This volatility can be pretty nasty, but if you know where the structure is, you're ahead of 95% of other people who just look from recent indicative price and RIP their money. To get a retracement here is absolutely fine, and it's very healthy. If we manage to break up to the upside, that's terrific, but don't forget there is a downtrend inside the markets currently. And for the profiting students, actually what this means, retracement trading is the nature of this particular market. It's vitally important to keep positive, not just inside financial markets, but inside life as well. Remember, all results come from the mind. A better mind creates better outcomes, and better habits create a better life. It's really easy to be negative on everything. After all, that's our survival mechanism. It's just geared into us. We're born with it. But to think positive means that you need to do daily positive affirmations for abundance, financial success, and happiness. You can just say to yourself, I know the universe is designed to make me succeed. If you do the right things each and every day, that success will be built upon. If you succeed by doing the wrong things, that success will ultimately be taken away. So it's very important to do success properly. Every day you can show kindness, integrity, and gratitude. And knowing that opportunities and life reset daily, you are worthy. Just go slow to go fast. Start small and scale. And when you are inside financial markets, buy on red, sell on green is the philosophy. You don't want to buy at the top and sell at the bottom. You want to flip that around. Always remember, life pullbacks will give you the strength for the next life rally. You are dedicated and committed. You either win or learn and never blame. Why don't we blame? Is that so easy to do? It's not our fault, it must be somebody else's. Well, you just keep on getting that loss again and again and again until you accept responsibility. And a lot of people say, we shouldn't accept responsibility, we should be victims. Well, you can be a victim inside financial markets, but you will lose your account. Don't forget, the market will not give you a participation award, it will give you a knowledge and emotional control award. And always solve your problems with positive excellence. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.